All right, what's up, tycoons? What's up, traders? Super excited for today's video. We're going to go ahead and go over everything that happened in May that was important and relevant. We're going to go over the stock market, the bond market, okay, and also take a look, not only at the treasuries, but some of the economic data as well. So make sure to smash that like button, subscribe to the channel if you guys are new. May was a mixed month for stocks as the Nasdaq surged, the S&P remained about flat, and the Dow Jones Industrial Average took a hit. The Nasdaq advanced 5.9% in May, largely thanks to stellar gains in the semiconductor space, notably by Nvidia, AMD, and Broadcom. The S&P 500 rose 0.4%, while the Dow Jones Industrial Average lost 3.2%. It was a down month around the world. Emerging markets slipped 1.7%, and developed markets sank 4.1%. Only 3 of the 11 U.S. stock sectors were positive in May, as tech, communication services, and consumer discretionary led the way. On the flip side, energy tumbled 10%, followed by materials and consumer staples. Now, unemployment increased by zero point 0.3 percentage points to 3.7% in May, 1 month after retreating back to its lowest level since 1969. Inflation remained essentially unchanged month over month, and the Federal Reserve issued its 10th consecutive rate hike at the start of the month, bringing the Fed's fund rate to 5.25%. Oil was down over 6.5% in May, bringing both WTI and Brent down over 41% from their highs last year. The U.S. Treasury yield spiked sharply in May amid debt ceiling risk. The 1-month Treasury bill surged a whopping 93 basis points to 5.28%, followed by the 3-month at 5.52% and 6-month at 5.46%. Long-term bonds, such as the 10-year, also got a lift, but its yield of 3.64 still puts it at the lowest on the curve. The Canada 10-year benchmark bond yield increased 34 basis points in May, and Japan's 10-year government bond interest rate ticked up 5. Now, if we dive a little bit deeper into here, right, we can see on May 30th, a new member was welcomed to the $1 trillion market cap club, which that was Nvidia. Although its club membership was brief, the chip maker surged a whopping 167% year to date. If Nvidia maintains its momentum with another quarter of strong earnings and solid forward-looking guidance, its market cap should be back over 1 trillion soon enough. And you can see here, Nvidia is actually going to be the green line here, okay? And you can see it has fallen right below that 1 trillion, but it's essentially right there. And, depending on what the next earnings report says, we may actually see Nvidia hold up in that trillion market cap, right? That'll be really, really interesting to see. I know for me at least. All right. If we take a look at the equity performances, the Nasdaq was up about 5.9%. The Russell 1000 was up 0.5%. S&P up 0.4. Russell 2000 down 0.9. And you can kind of see that this is really the trend right here. I mean, the returns have really been substantially in tech, right? When you look at the Nasdaq Composite, the 1-year returns is at 8%. The 6-month returns at 13.3. Meanwhile, the S&P and Russell 1000 are much lower at about 2.9 and 3.3% respectively. The Russell 2000 even being negative in the 1-month, 3-month, 6-month, and 1-year total returns. So, tech is really driving everything right now, largely in part due to the AI boom. The AI bubble really just started, back in, late November of last year. And we're seeing it still continue and still push a lot of stocks up at the moment. Who knows how much longer the AI bubble has? It may really just be starting and it could form for years, or, it could eventually be reaching a peak. People really don't know how to value AI yet and, truly put a valuation on, its true potential. Now, if we move forward a little bit and we take a look at the value versus growth performance over the trailing 12 months, we can see that IWD, which is the Russell 1000 value ETF, all right, that's down about 3.9%. On the month, we have IWF, which is the Russell 1000 growth ETF, outperforming at 4.7%. We have the Russell 2000 value ETF down 1.8%, and the Russell 2000 growth ETF at positive 0.2%. So we can see right now growth is outperforming value, and this is generally a bullish trend in the market, once you see growth outperforming value. Now, specifically when you go to the sector movements, again, we talked about tech really leading the way. You can see tech, communication services, and consumer discretionary. Things like Amazon and Tesla are really big in XLY. All right, you have communication services and technology in here. Those were all the 3 positive sectors. The rest of the sectors seeing a lot of pain right here, right? Specifically in energy. Staples were also really hit hard. Today, in fact, we actually saw a nice little rotation, it seems, in industrials. Maybe industrials are going to be the next to see a nice little bump in the market. We'll see if that trend continues or if that was really just something more short term and the flows continue to go in tech, communication services, and consumer discretionary. Now, when it comes to the hot stocks, we have the top 10 S&P 500 performers of May. Nvidia, we have AMD, AVGO, Tesla. Royal Caribbean was a big surprise, okay? A lot of people were looking at Royal Caribbean. We were looking at CCL, Carnival Cruise Lines, in the Discord. But you also have Synopsys up there. Netflix, you have ServiceNow, and you also have Live Nation, okay? So, sector-wise or industry-wise, you can see a lot of it is, happening from the semiconductors. All right, again, Tesla. All right, we have Royal Caribbean. So two cruise lines doing really good. I mean, what's amazing about the cruise lines is they were able to survive the pandemic, guys, the COVID crash and the COVID pandemic, where cruises were essentially shut down. Those companies, they did take on a lot of debt, but they were able to survive. And now the big question is, how much worse can it really get for these companies? Now, again, I mentioned they took on a lot of debt, but things got so bad for the cruise lines, and many people thought that these cruise ships would be abandoned. People weren't sure if people would go on cruises ever again. And they're starting to see some love again, and investors are starting to think that, hey, maybe these cruise lines are, a good investment to get back in at these prices. They are a good value, even with the amount of debt they have. Now, when it comes to the laggards and losers, we can look at the 10 worst S&P 500 performers of May. We have Advanced Auto Parts. Now, this is really, really a shocker to me, Advanced Auto Parts. Stocks like Advanced Auto Parts, stock like AutoZone, right, ticker symbol AZO. Normally those stocks hold up pretty well, being that, it doesn't matter if you're in a recession or a bull market or a thriving economy. Generally, people still will have to fix their cars, right? Whether they have a lot of money or whether they don't have money, if something happens to their cars, they're generally going to need to fix it no matter what. So I was pretty surprised to see that. We have Paramount Global in there, down a bunch as well, down 34%. We have Newell Brands, VF Corp, Catalent. We have Ulta Beauty, another one that's taken a really big hit. Ulta seemed like one of those stocks that would never really go down, and it has seen a very sharp drop here recently. I'm glad I avoided that one. I was actually looking at some long positions on a pullback. Decided it didn't look too good, and it really just continued to drop. Then you have Estee Lauder in there as well. EL, very similar to Ulta. Okay, both of those are down to pretty much the same amount, 25.7% and 25.4. You have Sealed Air, Oregon and Co. as well. So we're seeing some of these makeup brands be hit. Now I have heard that that they do a lot in China, and China's economy hasn't been as strong. So there is possibly the fact that China is hitting some of these. That is something to possibly consider. And when you look at the economic data from an employment standpoint, after once again tying its lowest level since 1969 in April, May's unemployment rate bounced up 3.7%. The labor force participation rate remained unchanged at 62.6% for the third straight month. 253,000 jobs were added in April, firmly beating non-farm payroll expectations of $180,000 or 180,000 for the month. And this is something where, a lot of times in 2022, this was something that would crash the market. Okay. And the reason being is because, they're saying, oh, well, the labor market's too strong. The Fed's going to have to tighten more. The Fed's going to have to tighten more. And what we're seeing is that inflation is starting to come down a little bit. And even though the labor market is strong, it's really just suggesting that, hey, we may have a little bit of higher inflation. Inflation may be stickier for longer, but we're not really seeing a true recession right now because nobody's really losing jobs. And, there's so many jobs out there available. Now, I know some people are being, fired and, let off from their jobs, but oftentimes this is related to the tech sector and big tech. And, there are other jobs available to them, maybe just not as much or as high paying as they would like, right? But when you look at a lot of, some of the lower income and middle income jobs, there's lots of opportunities out there, and we keep seeing a strong labor market. Now, consumers and inflation was virtually unchanged in April at 4.93%, as US core inflation at 5.52%. Both inflation readings came in less than 0.1% lower than the previous month. Kind of just suggesting that inflation is really sticky. If you guys watch my videos, I really like going over the core sticky chart for inflation, and it really hasn't gone nowhere, right? It went up in a straight line, and now it's really just consolidated sideways and hasn't seen a huge drop or a huge move up. Inflation is just kind of sticking around, which is kind of my whole thesis that, really in the beginning of the year, everyone was already talking about rate cuts, even at the end of last year. And I was saying that, I think we may just be adjusting to a new time period where we have higher inflation, we have higher interest rates, but we also have, a stronger economy and a stronger stock market than some people are expecting. Right. You look at personal spending, it increased 0.84% month over month. The Federal Reserve hiked, we talked about this, by 25 basis points at its May 3rd FOMC meeting, bringing it to 5.25%. It's now has been hiked 500 basis points since the first rate hike 14 months ago on March 16th of 2022. In the US ISM manufacturing PMI slipped further into contraction territory in May, falling another zero point 0.2 points to 46.9. U.S. retail and food service sales rose 0.4% month over month, ending a 2-month streak of declines. And the year-over-year U.S. producer price index further cooled down in April to 2.34%. Now, housing, we see U.S. new single-family home sales were up 4.1% in April, though U.S. existing home sales slipped 3.4%. Despite the decline in existing home sales, the median sales price of existing home rose by 3.6% to $388,800. Mortgage rates were also on the rise in May. 15-year and 30-year mortgage rates ended the month at 5.97% and 6.57%, respectively. The price of gold spent the first half of May above 2,000, but ended the month at 1962, down slightly month over month. Now, I've been covering gold a lot as well on this channel. I do think that gold is heading down to the 1916 area, if not potentially lower. We're going to see what happens when it comes to that 1916 area. But, we were due for a correction after hitting a nice 5-wave bullish structure. And, it's following the technical analysis pretty well. So, I'll be interested to see if we end up bouncing at some of the levels that I'm looking for a bounce in between that 1916 and 1880, 1890 area. Is where I'll be looking for potential support in the gold futures. Oil prices took a breather. The price of WTI per barrel dipped 6.5% to 71.81, and Brent sank 6.8% to 75.77. Both types of crude oil are down over 41% from their highs set in March of 2022. May's decline in oil prices translated into 3 cents off the average price of regular gas to $3.78 per gallon at the end of May. And the crypto bull run took a pause in May as the price of Bitcoin fell 7.6%, while Ethereum slipped 1.9%. Nonetheless, crypto has enjoyed a remarkable start to 2023. Bitcoin is up 63.7%, and Ethereum is 56% higher. May was the first down month for Bitcoin and Ethereum so far in 2023. Will that trend continue throughout June and possibly even July? Now, fixed income, when you look at the U.S. Treasury yield curve, and you take a look at the different rates, we can see the 1 month was at 5.28, 3 month at 5.52, 6 month at 5.46, and really just been keeping this steady incline, that we've really seen over the longer term. Here recently in about the end of Q1, right around March, we did see Treasury rates start to dip a little bit, but it was very short-lived, right? And then they started to rise back up again in April, and we're seeing things like TLT go back down, okay? Different things like that. So TLT is definitely something I'm paying a lot of attention to. I'll be dropping a TLT video very soon. It'll be another good video with lots of economic data as well in there. You look at the global bonds, okay? We can see that here recently, some of them have started to fall. And I believe Canada just came out with a big announcement that kind of spooked the markets today. But Italy's long-term bond interest rate is at 4.16. The 10-year treasury rate at 3.64. Spain's long-term is at 3.36. Canada's 10-year benchmark is at 3.18. The 10-year Eurozone is at 3.08. And Germany long-term bond interest rate is at 2.26. And Japan is at 0.45%. So that pretty much covers, the bonds, the treasury market, the economic data that really surrounded and happened in May, as well as some of the recent stock news that, in developments that we saw in May. hopefully you guys enjoyed this video. Will these trends continue? Okay, do you think that the trends that lasted in May are going to continue into June and July? Or do you think it's time for a rotation and we could see some, some of the sectors that were winning in the first half of the year so far, start to see some rotation out of those and possibly into some other sectors of the market? Let me know in the comments down below.